The JSE has been peppered with trading updates from the retail sector in the last week or so, the latest of which is Clicks. Earlier on, my colleague Svetlana Deneva spoke to David Neal, the CEO of Clicks. Here's that conversation.
I think it met our expectations because we were expecting this to be a fairly tough period with consumers not really feeling confident, and so what we saw happening was customers leaving their spend till the very last minute, so leaving Christmas spending very late indeed, and very clearly looking for value. So they were very cautious about what they spent. There was innovation, they bought innovation, but they were very value conscious above all else.
Any surprise performers amongst your group?
I think that we're probably fairly pleased with how our Musica division performed, because people keep talking about CDs and DVDs declining, and that business in comparable stores grew sales by 8.5%. So that team did very well. Especially
to how it performed last year, the comparison.
Correct, absolutely.
Let's actually go into Musica in a little bit more detail. iTunes store opened up towards the end of last year in South Africa, which makes MP3s now legally more accessible to South Africans. Also, internet connectivity and accessibility is increasing. What does that mean for Musica? How are you guys reinventing Musica?
Look, I think that the heritage of Musica is still pretty much around how you access music. So as people are now downloading more music, then they're listening to music in different ways. We're responding to that by introducing South Africa's widest range of headphones. So we're still permitting people to access music, and of course a lot of people still actually want to buy the product in the physical format.
Now, consumer spending. Inflation is seen increasing this year, which means it's yet another erosion factor on disposable incomes for South Africans. How are you looking at the consumer in the year going ahead? At disposable incomes in specific, what are your plans for product inflation in your stores?
I don't think 2013 is going to be significantly different from 2012 if you look around the world. There isn't much good economic news coming out of any country. And I think South African consumers are going to feel that, so they're going to stay cautious. I don't think the prospects for employment growth look very promising. So I think it's going to be another difficult year where we need to focus on offering consumers new products, innovation, to which they will respond, and also very good value. So I would expect our rate of inflation in health and beauty to stay below the national rate of inflation as it has now. I mean, we're running with inflation of just over 2%. So we're actually very focused on giving customers great value in Clicks.
MPC meeting tomorrow. Do you think that the Reserve Bank should cut rates to stimulate consumer spending, or do you think they've done enough, as much as they can do from a monetary point of view perspective?
I don't think taking another 0.5% is going to stimulate consumer spending. I think the issues are rather deeper than that. So I would personally expect the rate to stay where it is.
Let's talk about Clicks in 2013. We have seen some very exciting developments from the company in all respects over the last year and a half, with a lot of new products, different ranges being reinvented. What do you have up your sleeve for this year?
Well, we're going to continue opening new stores. We'll open between 20 and 30 this year. We're still opening more pharmacies, so again we'll open around 20 to 30 new pharmacies this year. And of course in our beauty business it's a process of continual reinvention with the introduction of new products. And I'm pretty pleased with our beauty performance this year. We've brought in new exclusive brands like NYX. We've also experimented with Nail Studio, because nail is a big trend in cosmetics this year.